This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, August 4, 2026, and this is the New York pre-market. Now, let's get into it. We are opening Tuesday, August 4, 2026, in a market that is charging straight at a wall of resistance. The S&P 500 ETF, SPY, is trading at $757.67, just $0.91 away from its 10-day high of $758.58. The Nasdaq 100, QQQ, is up 1.76% to $700.07, and the Russell 2000, IWM, is pressing against $296.75. It is a synchronized move across growth, small caps, and industrials, yet the VIX has collapsed to 15.99. We need to determine if this is a confirmed breakout or a trap setting in motion. Let's look at the data. On the calendar today, we have durable goods orders, JOLTS job openings, and the trade balance release. These are the primary macro inputs for the day, with no additional earnings giants listed in the immediate high-impact tier beyond the pre-market movers we are tracking. What do we see in the tape right now? The director's brief highlights a clear rotational theme. Broad market indices are surging into resistance, driven by technology, communication services, and small caps. SPY is at $757.67, QQQ is at $700.07, and IWM is at $296.22. Meanwhile, defensive sectors like utilities, the utilities sector, are lagging significantly. Let's dig into the mechanics of this move. Grid, SPY is hovering at $757.67, essentially touching the ceiling. Is this a breakout or a failure waiting to happen?
It is a binary choice at this exact second. SPY is trading at $757.67, which is within 0.1% of the $758.58 previous high. The structure is a tight consolidation zone established between July 28 and 31, with a defined range of $729.10 to $758.58 over the last 10 days. We are seeing price action compress into the upper bound. If we get a close above $758.58, it confirms bullish continuation. If we reject, we fall back to the $749.44 support level, which is the July 3 open. Currently, the momentum favors the upside, but the setup is fragile because QQQ and IWM are outperforming SPY, meaning this rally is being fueled by high beta growth, not defensive stability.
I have to interrupt on the momentum favors upside phrasing grid. You're looking at price, but you're ignoring the cost of that position. The VIX is at 15.99, down 1.1 points. That is not just low, it is complacent. You are talking about a breakout at $758.58, but with the VIX compressed this far, there is virtually no latent selling pressure priced in. That makes the breakout statistically prone to failure. You are assuming the trend continues linearly, but the macro environment, specifically a core PCE of 3.29% and a flat yield curve, does not support this multiple expansion. The risk is that this breakout fails precisely because no one paid for insurance.
That is a macro argument, SPECTER, not a technical one. Technically, the data shows strength. The 10-day range for QQQ is $661.14 to $710.05, and it is nearing that upper bound. IWM is at $296.22, challenging its 10-day high of $296.75. When the smaller caps and the tech-heavy Nasdaq are leading the S&P, it indicates aggressive risk-taking. My concern isn't the macro theory. My concern is whether volume confirms the break of $758.58. If volume doesn't expand, yes, we revert to $749.44. But right now, the chart is screaming for higher prices, not lower.
But the chart is lying to you if it ignores the VIX. A breakout on a VIX of 15.99 is a fake out waiting to correct. Look at the micro-cap volatility. SEG jumped 498%, FNGA crashed 95%. That is not healthy market breadth. That is speculative frenzy. You can have a technical breakout, but if the underlying volatility structure is this distorted, the mean reversion will be violent when it comes.
So we have a conflict. Grid sees a technical breakout imminent at $758.58, while SPECTER sees a volatility trap due to the VIX staying at 15.99. Let's pivot to the sector leadership driving this. Pulse, walk us through the sentiment. We have communication services up 2.86% and consumer discretionary up 1.83%, while the energy sector is down 1.28%. How is the crowd reacting to this? It's classic greed composure, CIPHER. The VIX at 15.99 tells me everyone is comfortable. We are seeing aggressive buying in high-beta growth sectors. Here is the fascinating decoupling. Meta has a bearish news sentiment score of 0.33, yet it is participating in the communication services rally, which is up 3.42% this week. The market is ignoring the headline risk in favor of the sector beta. Similarly, Coin is showing +1 sentiment, and MU is +0.5. The crowd is not worried about fundamentals. They are chasing the momentum. The flight from the utilities sector, which is down 2.89% this week, confirms that capital is explicitly leaving safety for risk. It's a pure momentum play.
And that momentum is expensive pulse. From a fundamentals standpoint, we are seeing severe dislocation. Take Wayfair W, it gapped up 18.1% to $105.50 despite an earnings miss. The headline says earnings per share miss, but the price action suggests a beat on forward guidance or margins. The market is rewarding future expectations, not past results. This is happening across the board. Palantir, PLTR, is up 16.5% to $146.41 purely on sentiment coverage. We are seeing institutions price in a cyclical recovery, while core PCE sits at 3.29%. The bid is strong, yes, but it is built on guidance beats and sentiment narratives, not hard earnings power in the aggregate index.
Exactly, CIPHER. And that reliance on narrative makes it fragile. You mentioned the micro-cap frenzy, SEG and FNGA. That is the same energy driving the consumer discretionary and IWM rallies. The retail and flow traders are leveraging into this low VIX environment. It feels good now, but when the narrative shifts, the exit door gets crowded quickly. I'm watching the put/call ratios for SPY and QQQ closely. If they spike while price stalls at $758.58, that's the signal.
Which brings us to the valuation pressure. With the Fed funds rate at 3.63% and core PCE at 3.29%, the real rates are restrictive. How do you justify the multiple expansion in QQQ at $700.07 without easing in inflation? The market is ignoring the yield curve flattening, which is at +0.45 pp. Historically, that's a slowdown signal, not a growth signal. So while Pulse sees greed, I see a valuation mismatch. The bid is there, but the anchor is dragging.
So we have Grid watching the $758.58 technical break, Pulse noting the decoupling of price from sentiment, like in Meta, and CIPHER highlighting the valuation disconnect with W and PLTR. Apex, how do you synthesize this? Is the SPY move at $757.67 sustainable given these conflicting signals?
CIPHER raises the critical point about valuation. SPY is at $757.67, and QQQ is at $700.07, expanding multiples despite a core PCE of 3.29% and a flat yield curve. This suggests the rally is disconnected from fundamental value. Grid notes the technical necessity of breaking $758.58, but CIPHER argues that without improvement in inflation data, any break is unsupported. Pulse observes the greed driving communication services and consumer discretionary, but warns of fragility. The synthesis is simple. The technical structure allows for upside, but the fundamental and sentiment structures provide no cushion for error. We are riding a wave of momentum that is detaching from the macro reality.
Let's drill down into the specific movers. We've talked broadly, but let's look at SPY itself. It's the bellwether. Grid, you had the levels. What happens if it closes above $758.58?
If we close above $758.58, we invalidate the consolidation box. The next logical extension is based on the width of the prior range, but more importantly it confirms that the high beta leaders, QQQ and IWM, are carrying the weight. IWM is at $296.22, very close to $296.75. If SPY clears $758.58, IWM needs to clear $296.75 to validate the breadth. Right now, SPY is at $757.67, so we are milliseconds away from a decision. The support architecture is $749.44. If we break down from here, we lose the 10-day uptrend entirely.
I'll add to that, Grid. The quality of that breakout depends on whether it's led by earnings or just noise. We have CAT up 11.8% to $928.17 and W up 18.1%. Those are individual stock drivers. Are we getting a broad-based breakout, or is it just a few names lifting the index? If SPY breaks $758.58, but only 2 or 3 stocks are responsible, it's hollow. I'm watching the depth of the book. If the order flow is thin, above $758.58, it will snap back.
And that's the risk, CIPHER. Thin order flow above resistance in a low VIX environment is a disaster waiting to happen. You have SPY at $757.67. One bad print, one unexpected headline from the durable goods data, and that $0.91 buffer vanishes. The VIX at 15.99 means nobody is hedging. When the drop starts, it will be fast. I'm telling you, the lack of hedging is the biggest risk on the board right now.
Fair enough. SPECTER is flagging the lack of hedge as a key risk factor. Now, let's look at the laggards. The energy sector is down 1.28%, and the utilities sector is down 0.22% today, but the utilities sector is off 2.89% this week. Pulse, why are the defensives dying? Because the greed mode is fully active. When the VIX is 15.99, utility dividends aren't attractive compared to the potential alpha in consumer discretionary or communication services. The sentiment data shows a complete rotation out of safety. Money is moving from the utilities sector into consumer discretionary and communication services. It's a risk-on trade. As long as the VIX stays suppressed, the utilities sector will continue to lag. It's not that utilities are failing. It's that risk appetite is swallowing all available yield.
Agreed, and from a fundamental flow perspective, capital is rotating into growth because the market is anticipating a soft landing or perhaps ignoring the hard landing risks. The energy sector is down 1.28% today, diverging from the broader market. Energy usually benefits from inflation, but here it's lagging. That tells me the market isn't worried about inflation shocks anymore. It's focused on growth. Whether that's justified by the 1.5% real GDP growth figure is debatable, but the flows are clear, away from value toward growth.
So we have a market that is rotating into growth, ignoring defensive yields, and pressing against technical resistance. Let's look at one more specific area, the small caps. IWM is up 1.72% to $296.22. CIPHER, you mentioned the micro-cap volatility earlier. What's happening there?
It's extreme. SEG is up 498%, FNGA is down 95%, JGGC is down 76%. This is not investing, this is gambling. The liquidity in these low-float names is being siphoned from the broader market. It creates a distortion. The IWM index looks healthy at $296.22, but underneath that index, there is massive chaos. This speculative frenzy can spill over. If those micro-caps reverse, they take some of the IWM gains with them. It's a sign of loose money, but loose money that isn't necessarily productive.
Technically, for IWM, the key is $296.75. If IWM breaks that, it matches the QQQ strength. QQQ is at $700.07, challenging $710.05. If IWM breaks $296.75 alongside QQQ breaking $710.05, then the SPY breakout at $758.58 is confirmed by breadth. But if IWM fails at $296.75 while SPY pushes $758.58, it's a bull trap. I am watching IWM closely. It needs to cooperate.
So the test is coherence. SPY at $757.67, IWM at $296.22, QQQ at $700.07. All three need to clear their respective highs, $758.58, $296.75, and $710.05, to validate the move. If one fails, the whole structure cracks. Apex, final synthesis on the opening hour.
The market is presenting a breakout or bust scenario. Grid has identified the technical thresholds: $758.58 for SPY, $296.75 for IWM, and $710.05 for QQQ. CIPHER has highlighted that the fuel for this move is largely sentiment-driven, PLTR-W, and potentially hollow if breadth doesn't confirm. SPECTER has warned that the VIX at 15.99 provides zero cushion for error. Pulse confirms the greed is present via the meta decoupling and sector rotation. The consensus is that the upside is passable, but the foundation is cracked. We are watching to see if the data supports the optimism or if the macro friction, core PCE 3.29% and the flat yield curve, wins out.
Excellent analysis. To summarize our pre-market outlook, we are facing a critical technical juncture with SPY at $757.67, just cents away from the $758.58 resistance. The rally is broad, with QQQ at $700.07 and IWM at $296.22, but it is driven by sentiment and sector rotation rather than fundamental stabilization. Watch for a breakout above $758.58 to confirm strength, but beware the VIX at 15.99 offering no protection against a reversal. Tomorrow, we will monitor the aftermath of the durable goods and JOLTS data, along with continued earnings reactions from names like W and PLTR. This is ShadowQuant Equities Edition. Stay alert. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Equities. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.